know that the spring season is coming up, and it's a season where a lot of people start looking at their house, they're looking at their yard, and they're saying, maybe I have these projects that I'm looking to do. And I know that a lot of times that turns the attention towards some home equity sort of conversations. Can you talk about, what are some tools that homeowners might use to tap the equity in their house and to use that for big projects?
Well, there's a couple different ways that a homeowner or our members could access those funds. Just one of the aspects about this high pressure market and challenges for folks getting into homes, it's really, as I mentioned earlier, increase the value of the home. So there's a lot of equity that our members have established over the last few years just in their owning their home as it is. So when they want to go in and access that equity to borrow against it, they could do, probably most common is a home equity line of credit. That's that line that you have, say you want to have a limit of $30,000, you can pull the equity out of the home for purchases. A lot of times people use that for home improvement, but folks use it to help send kids to school and buy a car. So there's a lot of flexibility with that. Mm-hmm. We have our home equity loan. That's something I really am proud of here at WECU, that we have a designated home equity loan. We've got great low fixed rates for those people that are really rate conscious and want to have a payment and a term and just know, hey, I'm going to pay this off 5, 7, 10, 20 years, and I don't have to think about it. I don't have to touch my first mortgage that may have a great rate because they did a recent refinance, but they also are just a little bit adverse to rate risk with a home equity line of credit.
Okay.
Which could be variable.
Okay, so 2 different tools.
Yeah.
Both sort of utilizing the equity in the home.
Absolutely.
And one of them is more kind of, you get a loan and you're going to pay this off. And the other one is kind of more open-ended, but like you said, the interest rate can fluctuate.
Yes, so that's where it gets a little bit confusing for folks, because I mentioned earlier, there's different rates that impact the rates that we're talking about for mortgage lending. There's the prime rate, and there's your typical first mortgage rate. Well, the prime lending rate is the one that's tied to the home equity line of credit, and that's variable. That one moves typically, depending on how the Federal Reserve sets up what's called the Fed funds rate,
okay.
And that impacts that.
Gotcha. Okay. Well, I'm sure that for folks listening who are homeowners, those are some interesting options to think about, to kind of look into a little bit more. What are you seeing more of these days? Are you seeing more home equity lines of credit that folks are taking out, or home equity loans?
Well, it's an interesting question. There's another way to access funds in your home equity, and I didn't bring that up here, but I'll mention it now, is actually taking cash out of your loan. So you're doing a refinance and actually pulling funds out of that loan. That's especially popular now because of our low interest rates and folks wanting to capitalize on that equity, but get a fixed rate for a long term that's in that 3% range. So that's the third option, and that is actually probably the most common at the moment.
Gotcha. So you're seeing a lot of those more commonly than the other options. Are you getting the sense, when you're having conversations with members these days, that they're saying, I don't want to compete in this housing market because it's crazy, and so I just want to do the work on my current house and make my current house what I want it to be. Are you seeing that sort of trend?
Yeah, oh, absolutely. That's there. Especially when people get a little bit of sticker shock when they go out to look for that next home. They realize, hey, I've got a great house here, but if I could expand or remodel, maybe do a renovation loan, I can make my home more of what I want, and I don't have to go move, take advantage again of those great rates, and achieve kind of the same goal.